This week, Ben and I are talking about the summer opening of E-15 sales, along with some planting updates throughout the Midwest and extended regions. Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as the University of Missouri's Ben Brown. Ben, how's it going?
Oh, things are good. How are you today, Will?
It's been a bit of a long day. I'm doing work in the Texas legislature and a lot going on, a lot of agricultural related bills being heard. But it's an exciting time. There's only 34 days left in the Texas session, so it's moving fast and furious to the finish line.
Nice. Well, good luck. I wish you well on the home stretch here.
Yeah, thus the tie that is still on as we record. Normally, we're recording this early in the morning, but right now it is Monday afternoon, kind of later into the evening. But Ben, before we dive into the topics for today, I'm going to give a quick snapshot of where we sit. Looking at May corn futures down 4 cents at 478, December corn down 11 cents at 455. Soybeans for the May contract up 14 cents at 10.49. November beans up 4 cents at 10.35. Soybean oil on a cents per pound basis for May up 1.42 cents at 49.28. Soybean meal by the short ton for May down $5.80 at $290. May wheat down 18 cents at 5.30. May cotton up 0.53 cents a pound at 66.85. Rough rice for May down 55 cents per counterweight at 12.935. And then that West Texas Intermediate crude oil contract up 85 cents a barrel at 62.53. So Ben, some losses in the corn market, some gains, and much of the soybean complex, and then we're seeing those fuel prices tick back up. What's your takeaway as we progress now, kind of toward the end of April?
Yeah, well, I'm going to pick on the soybean complex here for just a second. So that soybean oil market up a penny and a half, which might not seem like a whole lot, but that's a pretty good move in a week, and most of that came in the back end of the weekend. Same thing for the old crop soybean. So a little bit of spreading action happening there between the new crop and the old crop market. That old crop up 14 cents. So what's driving this is a little bit of the soybean oil market here as it relates to renewable fuels. A lot of industry participants felt that there could have been an announcement at the end of last week announcing increased usage of renewable fuels, whether that be biodiesel or renewable diesel, either one made from vegetable oils. There's been a lot of talk. The industry, the ag industry, and the oil industry has seemed to come to a compromise on this particular aspect of the US, the next stage of U.S. renewable fuel policy. And that led to quite a few people going in and buying that soybean oil market, and that helped lift old crop soybeans as well. Of course, it's always kind of getting close to the end of the contract as well. So
Mm-hmm.
light volumes. There were some buyers, and then you just had light volume, and that's what led to a 14-cent rally at the end of last week.
Well, there's like you say, there's only 3 days, 2 or 3 days left in April, so we're about to see some of those contracts come into their maturation there. But Ben, talking about some of the biofuels adjustments, the U.S. EPA is opening up nationwide use of E15 for the summer driving season. So, that adds another layer of demand there, looking especially on the corn side of the market. So, how does that kind of shift maybe what the balance sheet might look like as we move through this planting and growing season?
Yeah, so what's kind of become an annual tradition is as we get close to the summer driving season, the last couple of years, the US EPA has provided a waiver. It's an emergency fuel waiver to help with high fuel prices by allowing the sale of E15 through the summer driving season. The last couple of years, when oil prices were up closer to $100 a barrel, this was maybe a little bit of an easier sell. I wasn't in the room, so I don't know for sure, but I imagine it was a little bit of an easier sell. But many Midwest governors were petitioning for a waiver again this summer to allow E15 sales. What's unique about this is, if our listeners and viewers remember, there was actually the proposal to just go ahead and allow E15 year round and not have to, provide these waivers. Then some governors were able to basically hold it up in courts. Um, and now where we sit today is there's even some uncertainty here this week as we start the week around what actually is it that governors are asking for. Some in the industry are actually saying that governors have removed the E10 blending waiver for the summer, which historically had not been in contention, or well, here as late had not been in contention. It was year-round E10 sales, and so many governors, I think petitioned to remove that in the hopes that that could make E15 a little bit easier to get across the finish line. And of course, we were quickly coming up on a period where they both could have become binding and been a limiting factor. And so um, I think Monday's announcement of year-round E15, it kind of follows a similar pattern as the last couple of years, but there was actually a few more wrinkles to it here in 2025.
Well, and it's one of those interesting points, as you kind of alluded to, it's not like there's a consensus across the board on what the best action is to take. And, generally within the biofuels market, I know looking at the Biden administration in past years, it was heavily talked about in sustainable aviation fuel, but in a broader sense, just for general day-to-day use on the road, this is something that we've kind of, like you said, become accustomed to these annual waivers. But you'd have to expect maybe for more robust investment into these markets, into the infrastructure at the pump, that you'd want to have maybe a permanent situation rather than just depending on waivers year to year.
Yeah, absolutely. I think that's always been, or that seems to be the argument is like quite a few businesses and companies aren't willing to make the investment because it's an uncertain policy, and so they've been trying to correct that. And like I said, the Midwest kind of got it through, and it's held up in court now for at least the time being. So um, close to a Midwest year-round E15 usage, but not quite there.
Well, Ben, switching over into the planting season, we're seeing progress move along at a good rate for soybeans, a little bit behind for corn, and there's some variance, in other areas as well. But I kind of see April, I don't know if you've seen the movie Ocean's 11, but I see the month of April as the soft launch of the casino, and then May is the full grand opening when everyone's kind of heavy and going and trying to get things into the ground in a timely manner. So now that we're flipping the calendar into May, these weather events or any types of delays might start adding a little bit more pressure into the complexes on corn and soybeans and really across the board. So what's your picture as we look right now? We've had some delays in some areas due to moisture. I know, other places like Nebraska, we were just talking about, is getting some hail currently. So some variance in weather is causing, I guess, some variance in planting pace.
Sure. So, there are some states notably behind average in terms of planting pace. Illinois this week was at 16% planted. That's down 17 percentage points from their normal planting progress. Kentucky was 25% planted. That's down 19% from kind of their 5-year average planting pace. So, there are pockets where we've seen heavy rains. Illinois and Kentucky were right in that swath, or at least Southern Illinois and Western Kentucky were right in that swath that we saw at the very beginning of April that dumped 14, 15 inches of rain. That's going to take that's going to take a while to dry out. Just even if you don't have any more precipitation, we've seen a few more rain showers come through there, and so like, we're not at a point yet to where we're panicking, or at least I'm not panicking. The weather forecast is shifting a little bit closer to some of these western states that are at, or even a little bit above their average planting place. Kansas, Southwest Missouri, Oklahoma, those states are in line to get some more precipitation here in a bit. But this is always a question. People always, want you to come out and say, "Oh, we're way behind. The market should be rallying." And don't get me wrong. There's a point in time where the market really starts to focus on that, and it starts rallying really quickly. I don't know where that point is. We're here at the end of April, and certainly if we have another month of this all the way to where we're kicking, corn planting into
Tapping into
June,
June, yeah.
then people start getting concerned. But if we look, the fastest we've had in terms of planting pace over the last 5 years was 46%. We sit at 24% today. So that's 22% behind our fastest pace. However, our slowest year was 14% complete at this point in 2022, and we caught up pretty quickly in that year. So, there's room here, and the forecast is kind of shifting a little bit as well. And so I think maybe 2 more weeks before we can get a really good handle on what's happening. Or at least how the markets are reacting to the planting pace.
Well, Ben, the beautiful part about it too is, just because you get the crop in earlier, maybe doesn't even mean it's necessarily a positive, depending on what happens later in the season, weather-wise, and several other factors. I almost see economists and weather experts, almost working in the same business sometimes. But I don't know if you'd agree. But Ben, looking around, what's coming up this week? I know. USDA Secretary Rollins. She's actually in Texas, going to make a couple of stops with RFK, talking about some of the MAHA items and some of the what that could mean for agriculture. So maybe something to watch there. But otherwise, what should farmers and ranchers be paying attention to as they move through this week?
Yeah, so a couple of things I'll point out. We didn't talk about consumer sentiment today, but it plunged 8% in April. The reading that we saw in April is the fourth lowest monthly reading on record since all the way back in 1952. And a large part of that was driven by just concern about the overall economy. However, I would tell you that it's not yet, that concern about the economy has not yet started to show up in sales, like actual expenditures. And so this Wednesday, the 30th, we will get an update on personal income, consumer spending, personal consumption, and expenditures. That'll be a great report. And I think it's just one data point, frankly. So, it's one of those things where you always like to see more, but I think it'll be a great snapshot of what's happening in the consumer expenditure space. And how it relates to a lot of our value-added products, ethanol, renewable fuels, protein demand, meat, whether it's beef or pork or poultry. So I think Wednesday is a really big day. I think Wednesday could be a fascinating day. The other thing is Friday we'll get an update on U.S. unemployment and hourly wages. And then next Monday, another crop progress report to kind of get an idea of planting pace. And then Tuesday, I'm just going to throw this in there. Not only do we get an update on the U.S. trade deficit on Tuesday, May 6th, but that's also my birthday. And so that's how I'm going to end this. Is May 6th is my birthday.
All right, Ben, it's been a pleasure. Viewers and listeners, if you'd like to learn more about us and the program or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.